Hey, this is Tom, and I got a question for you. How does a little-known bank out of California, that I would assume 80% of you have never heard about before today's video, takes the entire global banking industry with it for a crazy ride within 24 hours?
All right, let's take another look at shares of Silicon Valley after hours. We have new reporting on companies pulling money out of the struggling bank.
Over the past 24 hours, shares of Silicon Valley Bank dropped by 60%. We'll talk about why the shares dropped by 60%, and they're actually down 30% in pre-market as of the making of this video. While this was going on, the top 4 US banks dropped $50 billion in market cap in a single day, including guys like Schwab and JP Morgan. JP Morgan dropped 5%, Schwab dropped like 13%. It's been an absolute bloodbath.
Unfortunately, this is the way banks work. They rely on trust. When they lose that trust, bad things really will happen.
Now, there's a reason you've never heard about Silicon Valley Bank, and the reason is because this bank works specifically, exclusively, with growth companies, with startups, and with venture capital firms. It's basically a niche product located in Santa Clara, California, and it's not supposed to be something you know about. But over the ballooning of the entire growth tech industry since the pandemic, 2020, 2021, the bank ballooned with it. You know, cheap money, zero interest, the absolute flooding of funds, the Fed starting a party, right? So the Silicon Valley Bank enjoyed that. Deposits went up by 90% year over year in 2021, reaching $200 billion. The party was on. But then, as you know, the Fed shut down the tap. The parents came home and turned on the lights and kicked everybody out. Party's over. This is pretty much what happened in 2022. The Fed stopped the cheap money era. It started tightening. Interest rates jumped up. The cheap money era was over, and the growth tech industry basically plummeted into the toilet faster than grandpa after a Christmas party. And with it, Silicon Valley Bank. And obviously, over the past year, the SVB balance sheet went from looking like a rock star to Swiss cheese, pretty much, full of holes. Now, as of December 31st, 2022, SVB's balance sheet showed available for sale securities, which had a fair market value of $26 billion, which is $2.5 billion below the $28.5 billion of it actually costing the bank. So the bank bought it at 28.5, and now it's marked at 26. And it had held to maturity securities with fair market value of $76 billion, which is $15 billion below the balance sheet value. So, give or take a few $100 million here and there, SVB is in the hole for about $17.5 billion, which is actually more than the entire equity it has, which is $16 billion. And that's never good. I mean, whether you're a banker or a grocery guy from the neighborhood, you know that that's bad. Now, with that, obviously confidence in the bank started to erode. Deposits started to fall out, and people started leaving the bank. There's little money coming in. You know the story. Every bank that people lose confidence in, this is the exact same story. Now, deposits dropped 13% during the final 3 quarters of 2022, as you would expect, and they continue to drop well into 2023 as of the making of this video. So eventually, Standard & Poor's had to wake up from their slumber and actually downgrade SVB, and they took their credit down to one level above junk. Moody's actually quickly did the same thing because it's a copycat industry, and they said that, we're downgrading SVB because deterioration in the bank's funding, liquidity, and profitability, declining venture capital investments, etc., etc., etc. Yeah, thanks, Captain Obvious. I mean, we all knew that. But the trigger, what started this whole implosion, this cataclysmic craziness that we saw yesterday, was none of that. It was something completely different. Now, about 2 days ago, March 8th, SVB came out and admitted it sold all of its available for sale securities because it's needed cash. Now, after that, things went rapidly downhill. The official explanation from the bank was that this was nothing to worry about. In fact, the SVB CEO came out and said, "Stay calm, everybody, stay calm!" Since there's nothing more relaxing than a panic CEO screaming at you to stay calm, right? Now, as expected, that terrified the venture capital clients of the bank, including Peter Thiel, who has a lot of money with it through his funds, who apparently instructed his funds to take everything out of this motherfucker as fast as they can. Now, other smaller VC firms followed suit, obviously, which caused a 60% drop in the share price of SVB, which is the biggest drop we've seen in the last 7 years.
The Founders Fund, which a key VC player is advising that its own companies should withdraw funds from Silicon Valley Bank.
Now, the stock is still dropping in pre-market as we speak. It's about 30% down, so it ain't over yet. Now, according to Bloomberg, a startup CEO who would not identify himself said that yesterday he tried to take out their millions of dollars from SVB and could not withdraw it. But on the other hand, Bloomberg also said that several other clients of the bank actually told them that they were able to take out their money Thursday without any significant issues, whatever that means. We even had Bill Ackman yesterday calling for a government bailout of SVB yesterday, which pretty much tells you how bad things are. Although I wouldn't say that Bill Ackman is the best indicator of how bad things are. You remember that whole, the sky is falling thing that they did back in the day. So, take it with a grain of salt. Now, in my opinion, and this is strictly my own opinion for whatever it's worth to you, this is now starting to smell a little bit like a bank run. And, if that happens, nobody wants to be that last guy standing in a room holding its nuts. So, be very careful how you interpret this story. So the question is, how bad can this get? And is this kind of game over for SVB? And what does it mean for the rest of the stock market in general? Well, there is a risk that SVB runs out of cash and can't operate properly, which would mean that it would either be sold to a competitor or taken apart piece by piece. But I think it's a bit of overreaction at this point because especially since, the thing that started this whole shitstorm, which is the sale of stock that they've done, brought in a lot of cash, which should be enough for SVB to function for a while at least and stay afloat. But I think the more interesting question is, what about the rest of the industry and the greater market? Now, obviously, that's not a good sign for the market. And the bigger problem is that SVB is not the only bank who has this issue. They're not the only bank who sat on a bunch of unrealized losses. Now, the entire banking industry right now is basically holding on to its nuts, hoping for this thing not to get worse because there's a bunch of banks out there sitting on a heap of unrealized losses. And it's pretty much like a ticking time bomb they hope would not explode. Now, look, I don't have a crystal ball. I don't know how this plays out. But it seems like a big-ass canary in a tiny-ass mine warning us about what's to come. Now, as always, I hope you enjoyed this video. See you in the next one. Don't forget to smash the like button on your way out and subscribe. One little thing before you go. If you're an OG on the channel and you lasted this long, when you subscribe to the channel, make sure that the bell notification is on all notifications. Otherwise, YouTube won't let you know about my videos. So if you want to know whenever I upload, make sure you hit that bell and click all so you actually get notified. Quick PSA. See you in the next video.